the economy is in a sweet spot. The third quarter or second quarter fiscal year 24 GDP surprised very sharply on the upside. 6.7, 6.8 consensus, and the actual was closer to 7.6. So I think the first half of the year of the fiscal year growth is now averaging about 7.7%. So it's one of the strongest among the region as well as major economies. And I think much of that is led by investment spending, like you rightly mentioned, government as well as central government as well as state government, and some bit of private sector participation in industries that are have backward linkages to the capex cycle. In terms of consumption, I think it really reflects what's happening on the rural part of the economy, especially the farm sector. Where you have seen farm output actually come in weaker than expected. Weather has been erratic, and that has impacted the summer crop. And I think a high likelihood that will do the winter crop as well. So going forward, I would think that at least one more quarter, we have festivities. That's going to help demand. Festivities, I think the capex cycle still looks like it's humming. But into the final quarter of this fiscal year, which is basically Jan to March, you might see a bit of slowdown because that comes ahead of the elections. Much of the disbursements would have been front loaded. So on the year, I think growth looks like it's going to be closer to about 6.8, 6.9%.
Where does this put the RBI and their efforts to align inflation more closely to their 4% target on a durable basis?
The RBI, I think, has been quite clear in there, and I think their stance has not really changed. If you see the past 4-5 rate reviews, they are upbeat on inflation. I think there is a upgrade to their own forecast coming when they meet next week. But I think they have maintained that inflation at 5%, 4.5% is not what they're looking for. They're looking for 4 and durable at that. So I think, if anything, armed with this strong growth number, inflation is going to tick up again in November because of how food is behaving. I think they're going to be sitting pretty tight on the stance that they have, which is hawkish. They might not move on rates, but I think they will look to tweak some macroprudential measures that should make sure that any excesses in the economy in terms of at least credit growth, they could address that, as well as keep liquidity on a tight leash. But we don't see any rate hikes coming, but we don't see any let up on the hawkish stance as well, as far as policy direction is concerned.